This time, I'm gonna beat the S&P 500. I can just feel it. Have I tried in the past unsuccessfully? Yes. In fact, if you look at the graph, you might say, Fear, it's almost impressive how poorly you've done considering the fact that all the market has done recently is go up. To that I say, stop it, or you're gonna make me cry. But here's my proposal. For the next year, I'm going to try again. And if I fail, I'm going to take my own advice and just invest in the S&P 500. But here's my value proposition. You're going to see me every day, trades that I take, because I'm going to be trying to upload every day. See my thought process, see how I structure my time, because I have a full-time job. This is not something I can actively do. And finally, you can see what platforms and resources that I use. I'm going to do this. All right, here's my breakdown of my portfolio and my game plan for tomorrow, September 23rd, 2024. So let's get into it. First, we have my list of stocks you can see in column A, but the difference is these are my buys versus these are my shorts. In column B, I have the trades that I plan to make intraday, so between market open and market close. And passive trades are essentially where I'm putting limit orders or limit stop orders, and there's minimal intervention from me. The active trades are those larger positions, larger sizes, where I kind of have to be more careful and more involved with the trades. We have intraday, and this is between multiple days. And here it's not just passive or active trading, more a focus on, am I increasing or decreasing the positions? Because my strategies involve day trading only if I think there's a certain amount of overextension, if the market is severely overbought or oversold, and also mid to long-term plays. If I find a strong company that is in an upward trend, then intraday I will increase my position slowly at favorable points during the day. If I think, so for instance, CMG, which is Chipotle, if I think that now the company is having a unfavorable movement, even though some might argue, and if you look at the long-term trend, 10 years plus, it's a positive movement. There was a recovery, but in my opinion, the recovery is not fast enough. Usually with a strong company, with a strong recovery, there is immediate price action. So if you look at something like Meta, there was a sell-off. Netflix, there was a sell-off, but an immediate recovery, almost immediate recovery. I'm not seeing that yet, so I'm not too positive and confident on holding on to this stock, which is why intraday I would like to slowly decrease my position. So anytime it does gap up, I have limit positions, which I might show tomorrow. The platform that I use is Thinkorswim, part of Charles Schwab. I do have those placed. And I have my reasoning. I do think the market is currently overextended. I also think that the fact that we're in September, historically, that's been the worst month for the market. So I do think that will play into the fact that there will be a retraction. I don't know how much. I don't know exactly when. But that's kind of my game plan right now. And that's why intraday, most of these stocks, aside from Chipotle, I'm not really going to change the positions because I'm still waiting for a drop. And that's when I will change my strategy intraday. Catalyst, as I said, I think the market is overextended, and that's why here I've said systematic. Then we look at our shorts. And for our shorts, I do have some passive trades, but I have a lot of active ones. Each have pretty favorable patterns that indicate that there will be a retraction or a depreciation in the stock price. So let's take ICUI, which is a medical company, as an example. If we zoom out a little bit, we can see that even over the last year plus, it's been trending and creating this cup and handle pattern. And this is a very frequently seen pattern where the shareholders or investors who had position sizes here when the market, or the stock I should say, started tanking, will eventually want to start selling to at least break even or lock in a slightly net positive gain, because that's just how psychology for us works, where if we undergo or have a loss in a position and we get worried and we have to hold on and we're really hoping for the investment to go back, we're like, okay, as soon as it goes back to what I bought it at, that's it, I'm done, I'm going to sell my position, I don't want any more risk. That's why usually you'll see a sell-off after there's a recovery and it nears the previous all-time highs for the year, that is. Because if you look at long term, it has been gapping down. And that pretty much wraps up my strategy. One thing I'll add on to that is for active and passive trades, I'm pretty much looking, because it's intraday, I'm pretty much looking at RSI and exponential moving averages to help guide when I think a stock is overbought or oversold. And I may have already mentioned this, but one more time, my current strategy is, if it's passive, the idea is the day trades that I'm taking are smaller, and if it's active, and it's only active if my confidence level is way higher in terms of what the more short-term direction is, I'm taking bigger positions. So until next time, which will be tomorrow, where I'll show a breakdown of the trades that I placed, my thoughts, as well as what the change in my overall position or my portfolio is, and how much I am up or down for that day. I'm excited. I'll see you guys next time.